Welcome to Immersive Outlook. We have with us Shyam Srinivasan, MD and CEO of Federal Bank, joining us to share his perspectives on banking and the future of banking. So, Shyam, thank you very much for your time.
Thanks, Venkat.
To begin with, Shyam, you had very, very interesting journey, starting from TVS Lucas to Computer Point to Wipro to the banking world, and now almost 50 plus quarters at Federal Bank. Take us through the highlights of the journey, the interesting detours that you had, what prompted you to do all of these things, the highs and lows, if you will.
Thanks. When I'm often asked this question, I try and see if there's any story to tell. And I discovered that I became a banker because I was a bad engineer, probably. I think that's where I would start. Like you mentioned, I started right out of engineering, started working with Lucas TVS as a graduate engineer, a trainee. But I was quite clear, I didn't want to get stuck as an engineer, or in that technical space. Maybe skills were low. Leadership management was quite a pet theme for very long. And so during my early days of graduate traineeship, I was keen to get into the IIMs. I was not that, in the early 80s, going to the US was the next step for a graduate engineer, right? Most of my batch of maybe like 200 people, probably 100 went to the US. Some reason I didn't get too enamored by it, so my choice was to do management in India. I had an uncle of mine who was sort of a role model. And then I gave the IIMs. The first year, interestingly, I was in waiting list 85 or 73. It stopped at 72. So I told myself I'm almost there, but not there. So the second year I had to give it one more big heave, and that's how I got into IIM Calcutta. And at IIM also, I was very keen to get into banking. There again, I started, because I had worked in Computer Point, I did my summer project with Wipro. I had a campus placement that started off with Wipro. So it was one led to the other, and I was in Wipro. Though I quite enjoyed the 2+ years I was there, everything went well. The banking bug was all the time there. And at that time, if you remember, in the late 80s, literally 89, 90 beginning, Citi was setting up their consumer unit in India. And the headquarters was Chennai. I was working in Chennai that time. So many of my friends had already joined, and somebody just gave me a call saying, would you like to be interviewed? I said, absolutely, yes. And I showed up there. And I was hired, in under 5 minutes, not because I was good, but because I had played cricket all my life, and I'm an obsessive cricket fan, and I'd captained the IIM. And the gentleman who interviewed, unfortunately, passed away, Ashok Dutt, a great guy. He looked at my CV and said, oh, you're a cricket captain, you're hired. That's all that was the interview. Sorry, there was an interim step. He said, wait. He went out, came back in 3, 4, 5 minutes and said, you're hired. Later, I found out my classmate who was already in Citi, he went to check whether my CV was really true or not, and the guy confirmed. So that's how I ended up being a banker. And then, it's been one glorious, not glorious, one happy phase of being a banker, which I've never looked back. And, that's how it's sort of moved from engineering through to computers to, but in hindsight, that bias for technology has stayed with me always. Right? And that's probably helping me and the bank. The mantra is actually digital at the fore, human at the core. And we're quite excited by it and try to live that quite genuinely. You may have seen a campaign we've just broken, and I'll talk to you about in a while. But digital at the fore, human at the core, DFHC, just for convenience. Early in my time in the bank has always been even ahead of many other banks on adopting technology. It's been I would say, a good strength of the bank. In fact, we are one of the few banks that has an IT capability entirely homegrown in-house. So we don't outsource our technology, and this has been a philosophy. So having seen some of the foreign banks in those years were technologically more advanced and used technology because they had distribution weaknesses, they used technology to reach out. When I came to our bank and I saw this as a strength, an existing strength, the previous experience of technology to leapfrog and increase distribution seemed like a great opportunity given the fact that we do have technological strength. And around the time I joined our bank, the board was quite inspired to make the bank a more prominent national player from being largely regional, one location. And I think the demands of the business also meant to meet growth, you can't be in a 3% market, right? You have to play the India opportunity. So I think combination of homegrown strength, my own past experience and bias for technology, the need to scale up and grow and be more prominent across the country and meet our growth aspirations, all sort of converged quite nicely. And as the years passed, between say 2011 and 13, 14, we started framing our multi-year view, what we want to be, what we want to project to the market. It occurred that using technology, but I didn't want to go far away from who we are, which is human, right? And if you see the latest advertisement campaign, we are saying "Rishta aapse, sirf aap se nahi hai," right? So we are talking about the human element, and the two situations we've portrayed in the ads are real. These are not fabricated situations. These are real things that happen in our branch. So we thought, in a world that is getting hugely tech driven, if you can bring out the human and the relationship aspect and find a way to merge them too, you have a story to tell. And that's hopefully our promise, and that's what we're working to. So I think digital at the fore, human at the core, perfect banking partner, relationship theme are all beginning to connect as opposed to separate. So that's my current perspective of digital.
Excellent. Speaking of that, when you do such a transformational paradigm shift, if you will, it's not just about you. You have to carry along the entire stakeholders along with you, as well as a lot of employees, almost empowering the employees to use this technology and take the right decisions. The person at the branch, does he or she have the insights to act upon and reach out to the customers proactively? How do you ensure that the stakeholders, including all the employees, are upskilled constantly at the top of their ability to use and apply technology in their daily lives to handhold the customers and serve their needs?
See, most organizations, and I can speak for ours, there are, unfair to divide, but you could say you could be either a digital slave or you are totally against it, right? There's a spectrum, but if you take the two ends, and generally we believe technology is adopted or taken in easily by younger troops. Not necessarily true. My dad, who's 90 plus, is very, very savvy with technology. I am less actually. But the general consensus is younger is more technology friendly. They've sort of grown up on a diet of technology, right? So when our journey started, the average age of Federal Bank was 47. At the time I came to the bank, average age was 47, 48. Today the average age is 33. So what has happened is, in the natural growth of the bank, we've taken in over 9,000 employees who have joined literally at 2021 from out of their campuses. Now this cohort of people have grown up on technology, so for them it's not alien. So situationally we thought we are recruiting people afresh, so we don't have to teach them technology, we have to get them to use technology, right? So the capabilities we started providing forced people to move, naturally gravitate to technology, and the environment was conducive. Many of our capabilities we've built have been digital first. So if you see in the more recent years, the fintech world sort of exploding, I would with reasonable pride tell you that if anybody is starting a fintech today in India, any entrepreneur, almost sure that the first bank that they would call on is Federal. Right? If you see the biggest fintech bank partnerships in the country today, we are the only or the premium partner for those startups. Whether it's Jupiter for neobank, Epify for neobank, Rupeek for gold loan, DGV for what they call the cattle loans, dairy entrepreneur, dairy startups, India's first dairy startup, credit cards with FPL, the one card, and I can go on. And all this was because we created an ecosystem where the fintech could plug in and get on with their life. All fintechs need a bank partnership because they can't lend or collect deposits on their own. They need a partner. So we chose the approach of being a bank that invites them because we give them the APIs and they just plug in and get started. Not so easy, but it's easy. You know, it's in that realm. So our mantra for many years has been create the technology capability that is reasonably 101, that you don't need to be a rocket scientist to start participating in technology, and then you will get more followership and more users. So same philosophy over the last 10 years. Most of the products are developed digital first, and younger workforce, and those who are inclined to be technology friendly are the pioneers who get started with this. The rest sort of don't want to be left out, they catch on. So that's the interesting part. As we get technology better, the human connect is even more important. I mean, we could have done this on a video. That we are doing a handshake, that we are doing it in person, is also the connect, and which is why I go back to the Rishta Aapse thing, right? It's the connect part. As technology, as digital the world gets, the connect part is probably maybe an older variety, but it's can't be matched. How do we make sure digital at the fore, human at the core stays, sort of connected is the exciting part.
Amazing, amazing. I mean, the human connection is so critical, not only just in banking, across the spectrum of industries, right? I think you require technology as an accelerator, as a conduit to do some things better, faster, quicker, and probably give you traceability, etc. But it's not going to replace the human element of the equation.
In fact, I have a line which is the future of digital is human.
Yes, indeed.
Not digital future. Future of digital is human, not future of human is digital, is the other. Because AI is what? Basically, a crude definition of AI is it's just humanizing technology, right? Or technology is capturing human experiences and doing what ChatGPT and others are doing.
And keep training them till they reach a certain stage.
Yeah, but it's being trained by human for human to experience what humans have experienced.
Indeed.
So that's why I keep saying it's future of digital is human.
Yeah, but very perfectly said. Just to pivot towards the bank's performance, exceptional performance, firing on all cylinders, growth, profitability, the key metrics around margins, capital adequacy, all of them are healthy. I mean, obviously, there's always scope for improvement. As you look into the future, there are two questions I want to ask. One, given the macro headwinds that we are hitting on one side, there is a crisis is a few days away. That's how the CEOs are contemplating to run their businesses, not even weeks or months. You have these pressures coming up, the headwinds coming up, pressure on capital. Regulators are screaming and say, look, I need more capital from you. Customers are demanding more money for their investments. The conundrum of managing capital. Where do you see a federal bank heading? Where are the next set of growth vectors for the bank? One. And two, any possibilities, ideas around, you talked about partnerships, but more around mergers and acquisitions of certain specific skills, capabilities that you contemplate?
Good question. Firstly, I think I'll sort of anchor on one statement, which is our vision statement, to be the most admired bank. And I say that with some both pride and worry. Worry as in admired is never bought, it's earned. Mm-hmm. And you can lose it like that as fast as,
Takes a lifetime to get and takes a moment to lose it.
So we preach morning, night and day to everybody, including myself and the whole cohort of stakeholders, that being admired can't be taken for granted. So that keeps us, as I keep telling myself, happily dissatisfied. I'm happy but never satisfied. Mm-hmm. And I want the institution to be happily dissatisfied, restlessly dissatisfied, whatever you call it. And that's driven by our mantra of wanting to be the most admired bank. Now, if that is the sort of mantra which we are preaching and hopefully practicing all the time, you can take nothing for granted. And therefore, to my mind, crisis is never weeks away. We are in one. We are always in, whether it's a crisis or a quasi-crisis, you have to just accept it as the way of new life, right? Unfortunately, it's been one after the other, and probably it's not going to go away. What I tell ourselves is that we have done well, but our good is never good enough, right? Good is the enemy of great, as they say, right? So we have to keep pushing ourselves endlessly and hopefully get better each passing day. And the other belief we have is there are no silver bullets. You have to do this 1% better each day kind of game. Every day, everything getting better. Easy to say, hard to do, very hard to do, right? We'll have bad days. So in the journey of our bank, yes, we've come to a reasonable place in terms of profitability, in terms of growth. But again, if you benchmark against our own aspiration and or the top 4-5 players, we are still behind in size, right? Or in size or scale, whatever. We've told ourselves we want to be in the top 5 private sector banks in the country. There are 3-4 which are 2-3 times bigger than us, maybe 5 times bigger than us. So I don't want to be unreal and say we'll cross over and meet them. It's going to take a while, right? But certainly the 5th slot is open for 3-4 of us who are fighting to get into that space. And I believe we have a fighting chance to be there. And therefore our aspiration to be most admired, to get in the top 5 private sector banks are not unachievable if we do the stuff that we are choosing to do, regular, consistent. I go back to my favorite, Dravid. Right? I am a Rahul Dravid fan for the reason is just there is a certain degree of grit, determination, consistency, credibility, getting there by good effort and not some sort of flashy stuff. We want to be that bank. And that means we have to be driven by that purpose. I do think many of us are marching to that tune. And hopefully we will claim our rightful spot. And that's the journey.
In any specific areas of growth that you are focused on, as I call the growth vectors? And then again, as I said, any possible ideas of?
No, see, we continuously evaluate make or buy kind of decisions, right? Often we think for the bank of our size, where we have still only 1.5% market share in most of our businesses, there's enormous growth opportunity, right? We don't have to, even if the rest of India is flat, we have 98% of the market that we have not taken to chase. Right. So we have an opportunity, one. The second is, these are not either or, you could grow organically and look for inorganic opportunities. Inorganic opportunities, the issue I find is that any integration, whether it's a small 2,000 crore portfolio integration or a 25,000 crore bank purchase, the effort is almost similar. Platform integration, people culture integration, distraction for senior management to do that. So we have to be quite thoughtful about the kind of integration you want to do and for what reason. So bulk of our operational time is on organic strengthening, growing, execution, which I mentioned. We do have a effort occasionally look at portfolios or companies that, institutions that are worthy of us pursuing, but they are, what is good is never available, what is available is never not that good. So we have to balance that out. So my answer to your question is, all our attention is organic. Inorganic, there are some areas like microfinance, like credit cards, commercial vehicles. These are businesses that are new to us. We are growing quite well. If some opportunities may come, we would look at it. But let me add that that's not we're not burning to midnight oil to get that done. If it happens, great. Large part of the bank's time, board's time is on organic momentum because we still have a huge headroom to grow.
Are we looking at, given the disruptions, given the advent of technology, are we looking at fundamentally different banking architecture, if you will? And it's just not about architecture. A whole lot of gamut of things have to fall to make that fall in place to make the architecture work, i.e. Regulation, capital adequacy, security and privacy of the data and the customer's transactions. A lot of things have to fall in place. But overall, do you foresee, what kind of changes do you foresee in the short term and in the medium term in the fundamental banking business that would that would need your attention?
I think good question. Let me try and give you 2-3 insights on this. One is, I think the debate around will branches exist or not has been there at least in the last 10-15 years very often, and is likely to be there for some more time. First, I'm going to argue that your definition of a branch in our mind is a physical infrastructure with walk-in, there's a teller, there's a counter, there's an ATM, blah, blah, blah. And there are some 10 people in and out, right? But already definitionally, even this is a branch, right?
Right, exactly.
And we've launched 2 mobile buses fully fitted out in Madurai and Lucknow, which are serving as a branch. You could walk into the bus and you could do branch. Regulations are now saying a definition of what can be considered as a branch. Anything that is available for X hours a day for 4 days a week in a particular location can be considered as a branch. So I think one, regulatory changes, environment changes are forcing what may constitute as a branch. That said, I hold the theory that India has, if you do a X and Y axis of plot people, X axis being people with economic awareness at one end and zero or low awareness at the other, and digital friendliness at the top and digital friendly. You plot people, you will find cohorts of people sitting in, each one is equal to a big country by itself.
Indeed, very well said.
So, to fulfill requirements of a very digitally advanced, economically advanced, you could have a completely self-service model, but you don't need a branch. To fulfill the need of a economically very well off, but digitally unaware, you may still need a face-to-face or a branch engagement. Then there is the other thing is completely underserved, underbanked, digitally unaware, economically unfortunately not in a great place. They need facilities for growth. So each quadrant, and within the quadrant also there are so many ranges. To fulfill all this, I think it's not mine, yours, our next generation. You're talking of 2-3 generations of this going away. I would think branches in some form, shape will exist. It's already beginning to morph. Our own bank, around the time I joined, in the first 5 years, we added 600 branches. In the next 4.5 years, 0. This year, tomorrow, we'll finish 75 new branches. And next year, we'll add another 100. So, having said that, the nature of the branch is becoming lighter, more sales and service oriented, and less process oriented. And that's because technology is enabling process to be straight through, but you need still someone to sell and someone to serve. So I think the nature is changing, and I would argue that this won't disappear for 5-10 years. I can't see beyond that. That's my answer.
Any perspective on the whole e-rupee, e-currency, and how that will evolve, especially in a country like India and the kind of regulatory push and pull required to manage that transition?
As I see the current CBDC, the digital currency that's being worked on, is only a physical substitute of a paper, right? If you see it in that context, I think it's a great initiative from a point of view of avoiding fraud, avoiding transportation costs, inventory storage, logistics of movement of money, counting cash. So there's a 4,000-6,000 crores annual cost of printing, saving, stationery. That's the first benefit. Now, whether everybody shifts from physical currency to digital currency, like any other movement, it's multi-year. Now, the use cases of that may emerge as technology emerges, regulations emerge. So I think this is a fairly long haul activity. I don't see it happening, on 21st April 2025, everything will evaporate. No, but 10 years out it can. But what it is initially set to do, as I see it, is a measure of productivity enhancement, operational loss reduction, friction of carrying cost, storage of cost will start coming down.
So it's also a measure to manage your cost of
That's what I see.
cost of our business in a way, And certainly, your opinion is that the regulation will fall in place as and when the.
I'll give you a live example, right? Banks like us, and I'm sure bigger banks have a bigger problem. We sit on excess currency. As you know, the banks collect currency from customers. The cash that is placed in the bank's vault is our money. Banks, once I shift the money into the regulator's currency chest, RBI takes care of that currency. Excess cash the bank holds is actually loss making for the bank.
Indeed. So Shyam, the next question around the future of currency itself, the evolution of e-rupee, cashless transactions are already on us. Where do you see the future of this vector going, and whether this is a good thing to be in, good thing for Indian banks, and whether the regulators can manage such a transition effectively, going from managing physical currency to digital currency, the security behind it, the privacy behind it, and so forth and so on. Thoughts around that?
Yeah, I think if you're referring to the CBDC, the central bank digital currency at this point in time, my view is that it's an experiment that started, and I see the initial early year benefit as follows: to print, to preserve, to transport, to hold, to inventorize currency and have safety security features built in and all is about 4,500-6,000 crores per annum is the cost for the exchequer. I think more and more of that becoming digital, there's a cost reduction opportunity that is there. Second, banks carry the excess cash and there's a cost of carry. So as we get more digital and the need for physical notes disappears and therefore the attendant benefits, there's one upside that is waiting. Now, this is a 3-5 year journey or maybe even longer. Now in that journey, regulations are likely to evolve, so are the use cases, or the use cases are likely to evolve and so are the regulations. One feeds the other. So I do believe in passage of time, this whole CBDC will get another kind of life. But I would say early stage is more a digital form of currency which addresses issues of fraud, safety, security, inventory, logistic management, which is itself a good thing. That's how I see it. And we are also working with RBI H on the as a pilot bank trying to get this going very soon.
Last, very personal question: what drives you? What's you want to see as your footprints? As I said, it's all over. I can see them during my 2 visits over a spectrum of a decade. How much those footprints are visible, and they are extremely inspiring, Shyam. But from your point of view, let me hear from you.
No, I mean, I don't sound very bombastic, but in my very early years, and this is 1983, there's a movie called Flashdance, which of course there are many movies of similar thing, but there was a song in that movie called Take Your Passion and Make It Happen, right? And that stuck with me forever. I deeply get excited by this. The kick of building something special is very, very inviting. It's got many reasons to feel dejected and feel bad, but there are so many more overpowering reasons which are exciting to stay the course. And I go back to my favorite Mr. Dravid. It's long innings. Be in the crease, right? Play the ball.
Yes.
Play the situation.
Amazing. So, Shyam, thank you so much. I have gathered from you in speaking to you today. I am definitely inspired and walking away more learned from this conversation. Thank you.
Thank you.